I like this chart. This was a good nano banana 5-layer cake.
From Jensen.
We're focusing on the base layer there in energy, 3.5 trillion in global investments for this part of the economy.
Global. Let's emphasize that globally. It's a big number. There's a lot of energy grid and power generation investments being made. And why is this happening for GE Vernova? We're going to get to the backlog here in just a moment. We're talking about the base of the cake, which corresponds to the front end of developing semiconductors and electronics equipment. NVIDIA and a bunch of companies have been talking about this reindustrializing the United States. It's going to happen differently than a lot of folks realize. It's starting, yes, of course, with data center construction and power grid construction to meet that data center demand. But all of that is ultimately going to be in the future in support of new types of software, new software use cases, and also software that is embedded in products, in devices. Some of the purchases that we made during the dip, we finally initiated a position in Axon Enterprise. It's ultimately a device company, but there's lots of embedded software there. Also, there's a lot of actual subscription software as a service going on now as well. But that is a perfect example of a company that is going to benefit from all of the other layers happening underneath it as time goes on. Because the ultimate goal here, the biggest part of the economy, we want it to reinvert into an upside down triangle. We want applications and devices, actual end market products and services to be the biggest part of the economy. Right now, though, we're at energy generation and energy grid equipment.
So last November, you stated that the bottleneck isn't power, it's lack of economic incentive to expand power capacity more dramatically. And that's a very healthy situation for long-term investment.
I said that?
You said that.
I like these questions that are like holding me accountable for past statements. I like this.
People do listen to what you say. Sometimes other people listen to what you say. Recently, Jensen appeared on Dwarcast podcast and said that power is the major limiting factor for the current infrastructure build-out. What is your view on the current state of incentives for the energy expansion, and is there a risk that we see a slowdown due to lack of power, and who benefits in this scenario? Names like Constellation, GEV.
The comparison is always made to China and their abundance of power, but the economic incentives are a bit different. It changes when you have a government that helps support the build out of such a massive amount of excess power generation. That's not quite the same case in the US because the government has done the opposite now. For many decades is power generation and the electric grid and all the companies that participate, utility companies, are actually heavily regulated. And so the economic incentive really has to be there, and they have to make sure that if they're going to make an investment, that there's going to be a profit there for them. And so they have to submit. A lot of these companies, especially for consumer use, they have to get approvals before they put in a price hike. And all of that is a limiting factor for companies that build this. Now, when we're talking about data centers, though, that's actually not a regulated portion. Generally speaking, a lot of what these big hyperscalers are doing, it's an unregulated part of a utility company's business. Or for GE Vernova, maybe they're going to help some of these companies generate their own power, on-site power, or maybe a new power plant located very closely to the data center, and it's going to be mostly dedicated to powering the data center. And maybe they can sell some of the excess power, off-peak demand power back to the grid. A lot of that becomes unregulated. And so there is a shift a bit here with some of these projects where it is unregulated. The economic incentive is there, but it just takes time. Building a data center takes time, sometimes a couple of years. Building a chip fab takes a few years to get built. So does the electric grid. Expanding the grid, building a power plant, it's just not a quick thing. And so it's still a limiting factor because these projects are so big. Even the hyperscalers want to make sure that there's appropriate ROI. They're going to get a good investment return on this investment because they have to answer to their shareholders. And so I still think that's a healthy situation. Yes, it may be a limiting factor. Is it the most limiting factor? I think it probably made the same statement Jensen did, essentially. I don't think there's necessarily a conflict there. It's a limiting factor either way. Whether you want to look at it as it's holding back data center compute capacity, or if you want to look at it from a financial perspective, I think it's essentially the same thing.
Thank you.
Yeah, good question. And who's going to benefit? Well,
yep, exactly. Who's going to benefit? Let's look at some benefits that GE Vernova is reaping right now. On the left side of the slide, Q1 2026, that's the most recent quarter. And then that's a year-over-year comparison. You can see that their orders, backlog, revenue, and then we'll talk a little bit about their adjusted EBITDA and free cash flow here in just a moment. But all of those numbers significantly up. Nice increase in backlog and revenue, reaping the benefits.
This is interesting. When we originally talked about GE Vernova 2 years ago now, called it out as a timely investment. Part of the thesis was now that they're free of the old GE conglomerate, they could go out and make the productive investments that they need to make without having to go through so much corporate red tape. The other thesis was as they start to do that, as they are able to be free in making their own capital allocation decisions, we expected there to be a big ramp up in profit margin. And that is most definitely what has happened. 2 years ago, the profit margin was still close to nil, free cash flow and EBITDA. That's unadjusted EBITDA, earnings before interest, tax, depreciation, and amortization, both close to nil. And now it's robustly profitable. But you can still see the massive amount of potential there is for GE Vernova to actually do more. So that's why we pulled this chart up. And by the way, especially for US-based companies, usually within an hour of the report, this data is available to you via the research dashboard. So keep a lookout for that. Let's talk about the free cash flow because it was a big increase in free cash flow. Almost $5 billion in free cash flow reported, a massive year-over-year increase. There were some effects from the Prolec acquisition that we talked about back in November when it was announced. The acquisition was finished in February 1st or 2nd. And so they basically inherited the backlog from Prolec. Casey has that highlighted on the second line in deferred income. And then also because Prolec was a joint venture that GE Vernova partially owned, because they acquired that joint venture, they actually realized a gain on the sale of a business interest. It's kind of goofy because it's a sale to themselves, but nevertheless, that accounts for nearly $1 billion in the free cash flow. But even if you exclude that, the free cash flow generation was quite good. GE Vernova is most definitely benefiting a great deal right now from the build out of the electric grid and near site power generation for the data center companies. I think we had said it was closer to fair value than not after a year and a half of massive increases the last time we talked about this one. And it turns out there was still quite a bit left in the tank.
Everyone else thought so too.
Yeah.
And here's a look at their balance sheet. They've been debt-free. This was one thing that we called out when we first looked at GE Vernova because they were spun off from GE, and big conglomerates sometimes try to saddle their spinoffs with a little debt. That didn't happen with GE Vernova. They had a clean balance sheet. Now they have a little bit of debt based on that Prolec acquisition, but still in really fantastic shape.
Yeah. You got to love all that net cash on balance, even after a sizable purchase like that.
And then here is their 2026 guidance. They raised the guidance in January. You can see that kind of in the middle left column. They raised the revenue to 44.5 to 45.5 billion. So just a skosh, and adjusted those EBITDA and free cash flow margins, increased guidance on both of those as well.
Yeah, that's a huge beat and raise to kick off 2026. All of that considers the fact that the wind power part of the business actually declined again. They did have some new orders, it looks like, coming in for onshore wind. The offshore segment is still basically dead in the water for all intents and purposes, but the onshore segment is heating up. That said, the actual revenue did decline year over year. And so all of that beat and raise that you see on revenue and adjusted margin, free cash flow margin includes that. So really fantastic way to kick off 2026 for GE Vernova. Why don't you run us through a scenario here?
Wow, price has gone up a lot. We ran this when the stock price was close to 1,100. We used 100% weighted on earnings per share, which is $34.33. Puts us at a growth rate of 12% for the next 10 years and a terminal rate of 4% thereafter. The discount rate 10% gets us to the stock price that it is today. A growth rate of 12%.
Yeah. If the margins continue to improve, this is not an absurd scenario, but we'll reiterate what we said the last time we did an update on this. We do think it is now closer to fair value than not. It's not an undervalued asset, especially like it was 2 years ago. However, if you already own this one, obviously it has been a good idea to just leave it alone. And I think that still stands, especially when you look at their ability to go out and make more tuck-in acquisitions like they just did, acquiring the rest of Prolec they didn't own already. And they think that there are a lot of electric grid investments that need to be made for the foreseeable future. This is definitely one that is benefiting from a very large secular growth tailwind, as are a lot of their other companies that they compete with. Portions of Honeywell, which we're going to talk about before too long again.